can see, as I said, this big move in the dollar CAD, as you can see, just by using this last 6 months or so, or 8 months, you could see that the dollar has been in a tight range. And this is what I was telling you, that based on the weekly chart, we are still in a congestion area. And if I compress more data, you can see that this is still a, and now the picture begins to clarify. And if I put the weekly chart on, you can see that the dollar has been in a major downtrend. We had one break to the upside. This is a kind of a correction, and we are in a congestion area, matching what we call the matching congestions, and we have no breakout in either direction, either to the upside or to the downside. So we have to be trading the dollar CAD in as a currency that is in a sideways pattern. So we're looking for resistance points and reversals, and we're looking for turning points, and so on and so forth. Okay, but right now we are looking for a buy in the US dollar. We're looking for continued weakness in the Canadian. This close is not a close that I'm too comfortable with. So we need to be very careful before we initiate a buy, even though this looks very encouraging, but we have to be careful with our buying points. And we really don't have a clear sell signal either over here. So we don't have, as I said, looking at the weekly chart, we really don't have much of a buy signal, nor do we have much of a sell signal. So we have to we have to look at a smaller time frame to identify our buying point and our selling point. And if you look at the intraday, this is just a very strong momentum to the upside, and you can see the failure that has been developing, or the turnaround that has been by identifying those several momentum lows. You could see that how this thing is turning around. So with that, our first sell signal that we can logically take is somewhere around here, below this momentum high. So around the 104.17, so below the 104.10, this will be our first sell signal. So if it comes down to 105, even comes down 80 pips, we really don't have a sell signal. All that is actually, if it comes down 80 pips, that is a buying opportunity for us. If we wanted to buy it at 105.79, if I can buy it at 105 even, so I'm buying it cheaper. If I want to buy something, I'm paying less money for it. So I will not be looking to sell it unless it trades below the 104.10. So my sell point is 104.10, and if I sell it below the 104.10, I'm going to place my stop right above the 104.50. That is my stop, or my short stop. I'm going to buy it. This was our buying point from last week, the 105.76. So let's see if we'll take a $105.80. So if I'm going to buy it above 105.80, I'm going to place my stop below the market side, which is 105. 105.10. I'm going to place my stop here below the market size. This is a structural point, I believe, the 105.70. This has to go out. In this case, we have a very nice structural point, if you will, which is going to be our structural long, which is the 106.75. This is a very nice structural point, and it is a very strong structural point, by the way. So that is going to be our structural long, and we are just about 80 pips away or 90 pips away from this structural point. So if the dollar comes and trades above the 106.75 in the dollar CAD, that would be a trend changing breakout, and the trend in the dollar CAD will be to the upside, and the Canadian will actually have turned convincingly to the downside. So the structural long is going to be the 106.75, and the structural short is still the 102.50. Okay, so let's sum it up. So we are going to go long the dollar CAD above the 105.80, and if we do, we're going to place our stop below 105.10. If we're going to go short, we can only go short below the 104.10, because anything above that is still a buy signal. And if I go short below that, then I'm going to place my stop above. I'm just going to use a 40 pip stop of 104. Just have to go 104.50. My structural long is the 106.75, and this is a powerful point, and my structural short is the 102.50. Okay.